Now let's take a couple of questions in this new format. And the first one's from Michael. And this isn't really a question. He's just, he has some really cool comments. He goes, good morning. I want to really thank you for giving me extended access to the membership. I'm grateful for the offer as we transition to building a family. What your company has done for me has been astonishing. You've helped me be more logical with my investing, and have propelled me forward with building wealth for me and my family. Thank you for what you do. Looking forward to being a member for the years to come. Look, Michael, we have some negative emails too, of course, and I actually like reading negative emails more than the positive ones. But for something like this, this is what it's all about. This is why I do this. To make you a better investor doesn't mean you have to agree with my opinions all the time. You're not going to, even when it comes to stocks, even when it comes to, sometimes politics or whatever. But the one certainty is I'm always going to put you first. Okay. When I'm not making you money, I am freaking pissed off. Okay. And the day that I can't do that anymore, or I won't do this job. For right now, we're doing well. We're doing well across the portfolios. I love to see people making money. I love to see the trips that you guys go on, all that stuff. Again, that's everything to me. That's really special. So thank you so much, Michael. I appreciate it. And thank you for being a subscriber. It's from Faris. So Faris says, he goes, hey, Frank, you're recommending gold recently in Curzio Research Advisory. What does a recent gold stock action tell you? Are you rethinking your thesis? Is inflation transitory? Is gold as a monetary metal dead? Has it been replaced with Bitcoin? Ciao. So that's Faris. My thesis hasn't changed on gold. And you know why? Because one is I don't have like a massive position. I mean, I'd say like 10, 12% of my money, maybe 15% is in gold stocks. And a lot of those stocks I'm up on because I've gotten to really great private placements years ago and I still own shares. They're down from their highs like everybody else. But if you're 100% invested in gold, I'd be worried. If you're 100% invested in gold, I'd be worried. And I say that because of Vancouver and a lot of my friends, they're all in gold, mining, silver. There's a whole world out there with the S&P 500 and Dow, they're hitting new highs every single week. There's a lot of great names, new names coming out, just new deals coming out. You have access to. You shouldn't limit yourself to any sector, any investment, anything. Ever. Learn about. If you don't know, Peter Lynch says, well, we want to invest in what you know about. Well, you can know about anything. It's easy to learn about industries through Google, through anything for free. You can learn what cloud computing is. You can learn what hybrid cloud is. You can know the difference between those two, the companies. You could probably do that within an hour. Within an hour. Just shut everything off, lock yourself in a room, and just start reading. It's not hard. Ask lots of questions. Got sources like me where you can ask questions. But yeah, gold had the flash crash, and you'll be worried because the conditions have never been more favorable for gold as right now. If you look at supply demand, it's amazing, right? There hasn't been a lot of huge fines and like cut back on CapEx tremendously during, like 5, 6, 7 years ago when gold was terrible and these big companies were highly leveraged. So, there's huge demand for gold right now, especially from the majors, which is going to lead to more and more acquisitions of junior miners. You have the inflation thesis, but has it been replaced with Bitcoin? I don't think it's replaced, but I think Bitcoin has taken that luster away. Because one of the best things when it comes to gold is when you hit that cycle, and you're right, those names go up. They don't, not just by 100%. And we've seen that, right? Recently, probably about 2 years ago, finally coming off their bottoms, maybe 3 years ago, coming off those bottoms at that 5-6 year lull from 2012 to 2018 probably. But you're seeing gold surge where those gains are 3x, 5x, 7x. And those are huge gains when the cycle turns. And that was provided a lot of excitement for investors. But Bitcoin, I mean, if you look at our newsletter in Bitcoin, which we started in 2018, I think, might have been 17. I mean, some of those gains I've never seen in the stock market before. And I've been doing this for 30 years. And we had something that was up 40x at one point. We have a ton of names up, 10x, 12x, 15x in that portfolio. And this is even after the pullback. So when you have that, you're taking that speculative nature from junior miners away and going into Bitcoin and other alternative tokens, or, they're also called shit coins. But, we don't have any shit coins. We have like good names in our newsletter, but even stock picks around crypto and stuff like that. But is it taken away a little bit? But I wouldn't say it's dead. I don't think it's dead. I think you're going to see great names with good management teams that have great projects, high-grade gold. They're going to be bought because the balance sheets of the majors have never been stronger in the history of ever since they were formed. And the balance sheets are incredible. They're making a fortune. They can produce gold for under 1,000, and look where it is, even at 1,600, 1,700. I mean, huge margins, huge cash flow. A lot of these big guys are paying dividends now. Holy cow. Balance sheet flush with cash. Record margins, and they're trading at dirt cheap valuations, the majors. So definitely keep your allocation there. But the reason why I'm not worried or crazy is because, I don't have all of my money in gold, which I guarantee you some people listening to this right now do. I know people have all their money in uranium. It's crazy. It's crazy. Do I have money? Yes, I have big positions in uranium. But it's not 100% my portfolio. You got to be nuts. You could say supply, demand, and balance is definitely going to happen. Yeah, we saw a lot of these stocks move up, and now they've come down. But for me, the big tell is why are electricity companies who are in dire need of uranium, why are they not locking in prices at 30, 32, 33? Why? What are they waiting for? I would think it's going to go to 50, 60, 70 uranium prices. But, you really want to see that. Those are the smartest people in the room, right? Those are the guys who have to buy uranium in order to run their plants. So doesn't mean uranium can't go higher. The stocks can't go higher. Even though a lot of those uranium so-called, they're not producers, will never produce uranium probably for another 25 years, and prices have to stay over 100 probably for a good 5-year period. But who cares? Uranium prices go higher, these things will go higher. But don't be 100%, all in on one sector, guys. That's crazy. That's really crazy. And that's why I'm not worried about gold, because other things are doing well. And yes, gold might come back, and it had a little bit of a flash crash, came back a little bit. But I still think gold goes past 2,000. The conditions are ripe, and you'll see that. We're going to have low interest rates forever, negative real interest rates forever, and that makes gold a very good option, as well as Bitcoin. Guys, you're allowed to own both. I own both. You could own both. Get off Twitter, because the people at Bitcoin hate gold, gold hates Bitcoin. Get off of Twitter. You can own them both. Own them both. They're both good options in a world where the government, $3.5 trillion is fucking coming out. These guys are nuts. You think that's the end of it? $3.5 trillion? You think that's the end of it? No way. More trillions and trillions are coming. That's the new world. That's got to be great for gold. Last question here, and this is from John. It goes, Frank, I'm a chartered member of Curzio's newsletters. I've been a Curzio 1 member for over a year now, happily owning several private placements. Thank you very much. He goes, thanks for all you do. Be glad you're in Florida. They're trying to force my grandchildren to have the vaccine, even though they have had COVID. He goes on a little bit more. I don't want to mention too much here, but he's talking about the research. I will say that he is in this industry, very, very big in this industry. So it pisses him off more than anything, but I won't get to that point of it because I want to keep that, just in case. But John goes on, he says, I asked this question once before and never got an answer. Here's a story. I bought Walgreens years ago, WAL. I think that's Walgreens, right? What's WAL? I actually have to look at that now. Hold on, CNBC. Go here. But he says he bought WAL, because I don't remember it being that low, was it? Oh, okay, Western Alliance Bancorp. Wow, Western Alliance Bancorp. What did I think that was? Okay, Western Alliance Bancorp. WAL is a symbol, and I never heard of this name. But he goes, he bought it years ago for an average of $6.25 a share. That's how I knew it wasn't Walgreens. Sorry. A few years ago, it started paying $1 dividend and a 16% return. The stock was over 100 in May. And by the way, it's over 100 right now too. So I finally sold some, but then wonder if that is such a good idea, giving up such a great return. I'm sure this sounds like a silly dilemma. How do you manage this? Is there a point where you'd rather have the capital gain, especially with the talk of making the gain ordinary income? I know there is no hard and fast rule, but would like your thoughts. John, that's a pretty good problem to have. I can tell you that. But the stock is $6.50. Yeah, this Western Alliance Bancorp, good for you. I don't want to give tax advice. But I can tell you paying taxes is a good thing. It means you made money. And I've made the mistake where if I had a stock that was up a lot over 8 months or 9 months and I waited 12 months, a lot of times I'd seen that stock go down and it would have been better for me to sell it. And if you're close to that period, it's different. But, with the new tax structure, we haven't, from what my understanding is from the infrastructure package, is that the Republicans bought into this because it pushed off those, higher capital gains tax and higher taxes that were expected. Okay, that's what we're seeing. Again, it still has to go through the House, and who knows if it passes, it could have trouble. But as of right now. So if we do see those capital gains tax get extended from whatever, 20 to 31%, whatever they get extended to. It might be a good idea if you're looking to sell, but again, it is a good dilemma to have. You're right. It is, you say it sounds like a silly dilemma, but listen, I wouldn't even focus on that. I think you have to focus on the stock. If it still fits your thesis, if you still like it, continue to hold it, or at least sell off a portion of your position where you could hold this and you're not even worried if it goes down 30% anymore. So maybe you sell, say if you have $100,000 in the stock now, or $50,000 in the stock, whatever. Let's use a round numbers, $100,000. If you sell like $75,000, that's what I did with one of my positions in Hive Technologies, Hive Blockchain. I got out of it and made, great money on a private placement that I was in. And then I think I sold off 80% of it. And I'm pretty sure I got like $3.25, $3.50. It was $6, but I was under the lockup and I couldn't sell it quick enough. And I was in very, very, very early at a very good price. So I made a lot of money on it, and I kept 20% of that. And that thing fell to like the pennies. And now it's back up, went up tremendously. But I didn't really care because I made my money on the stock already. Because a lot of it has to do with your mind, John, psychology and how you feel. So if you're selling off a portion of this, I don't know how you would do it for tax reasons, tax purposes. Again, that's up to you. For me, I really don't make an investment decision in terms of, selling my stocks or buying stocks or things like that, looking at taxes all the time, unless it's very close to, again, it's a big difference between, short-term capital gains and long-term capital gains. So if I'm like 10, 11 months, I might wait another month or two to sell something, but not to the point where, for me, it's about the thesis. If you think this thing can go to 150, 120, 130, continue to hold it. If not, then you could sell your position. Remember, Western Alliance doesn't give a shit about you, John. They don't care about you. The stock doesn't care about you. Okay, so I know you have personal ties to it. You made a fortune on it, but if you're thinking of selling, which is your choice, I would sell a portion of it, and I think that solves the problem and your question here. Hopefully that answers your question. But John, great job on that. WAL, man, Western Alliance Bank Corp. Awesome.